Does your broker or financial analyst have your best interest in mind? That is the question. That is the subject near and dear to my heart. I think it's a much bigger issue. It may sound a little bit dry, but it's not. And who's going to make it even singier, zippier? Market Watch's Chuck Jaffe, who is here to talk about this one today. Chuck, Congress tackling this issue, why do I automatically feel nervous about it?
Well, the real answer is that Congress has already sort of botched this issue big time. And what they're really trying to do is get away from it. And worse yet, the congressmen are making it worse. Because I know that you feel the way I do, that the big thing here is there should be a fiduciary standard that says that everybody who's a financial advisor, no matter what stripe of financial advisor they are, has to put your best interests first. Well, Congress has already botched that. They couldn't put it together. They've now left it in the hands of the SEC trying to decide if they can come up with a standard. And this week, Congress came out with something that said, you know what? We need to change regulation, and we're going to maybe put a self-regulatory agency over all stripes of financial advisors.
So
and the way they seem to be doing it is going to probably make it that the fiduciary standard is killed, not enhanced.
Right, because they're going to let the brokers, when you talk about self-regulate, there won't be a government overseer, it'll be the industry. And the industry, are they going to make their lives harder? They're really going to make their lives harder?
Well, what it is that the industry is going to make certain people's lives harder. What you have here is the two sides. If you have a financial advisor, somebody who gets paid for selling advice, they have to put your interests first. If you have a broker, they basically get paid by the transaction, and they only have to sell you something that is suitable. And there's a big difference between something that is suitable and something that's in my best interest. What you've got is the lobbying arms for the brokerage houses, the big firms, basically saying, we want to have this self-regulatory agency. And if they do it and they only have one, well, what these guys are going to do is cram their rules on these guys and knock these guys out of the way. And that's how you kill the fiduciary standard completely.
A couple quick questions for you, Chuck. Was it, in terms of this legislation that was introduced, what was the impetus for it? Was it the Madoff situation? And also, you mentioned in your story the lines are getting blurred in these industries, in this industry, and at a lot of the broker dealers, they have investment advisors, guys that don't work on transactions but work on how much assets they manage. So, you know, how does that play out there?
Well, it still ultimately comes down to what are they charging you for? Are they charging you for the advice that they give you, or are they charging you for putting together the portfolio, actually doing the transactions? And the answer is that the lines are blurred because it was in the best interest of the brokerage community to sort of blur those lines. As for why they're doing it, well, the impetus they'll tell you, you know, you want to have a level playing field, and 58% of the broker dealers got an examination from the SEC last year, but only 8% of the investment advisors. So they'll tell you, well, you know, look at a scandal like Madoff, and wouldn't it be better if we had more regulation and more people going through checks? Right. The problem is that the investment advisors, the vast majority of them are small, and they're not regulated by the SEC. I mean, they fall under SEC rules, but they are regulated by their state securities administrator. That's the cop on the beat, is what the state securities administrators like to say. And they do a great job on this. There's far fewer problems. So we're actually talking about taking the cop on the beat off the beat and putting a big overarching conflicted agency in charge, and it's going to be a mess if it comes to this, and the hope would be that it won't.
We have to leave it there, Chuck. Bottom line is you should know whether your broker is under a fiduciary standard or not, your investment advisor. You should know what their true goal is there. Chuck Jaffe, thank you very much. Talk to you soon.